Hi, I'm Keon, a senior research analyst with Lipper, here to speak to you about fund flows results for the week ended Wednesday, July 8th. We'll start this week's report by taking a look at the overall flows results for our fund macro groups. Equity mutual funds had net outflows of $5.1 billion last week. All the other fund asset groups took in net new money, as we see taxable bond funds, muni bond funds, and money market funds with net inflows of $6 billion, $644 million, and $4.7 billion respectively. For money market funds, that was their first weekly net inflow in 8 weeks. We'll take a quick look at the overall market activity for the week to see some of the information that drove this. Equity indices finished up for the fund flows trading week, as the NASDAQ Composite Index, S&P 500 Index, and the Dow Jones Industrial Average gained 3.3%, 1.7%, and 1.3% respectively. Positives for the markets this week included the largest one-month jump ever for the Institute for Supply Management's Service Sector Index. The index closed June at 57.1, which was up 11.7 from the May results. Any result above 50 for this measure represents the economic growth. Also, the U.S. economy created jobs at a record rate in June. The 4.8 million new jobs created is the most since the government started tracking this data in 1939. This result could be expected as states started to reopen for business and furloughed employees came back to work. The markets also took some strength from bullish news out of China, as the country's Shanghai Composite Index appreciated more than 5% to close at its highest level in approximately 2 years. Let's turn our attention back now to the fund flows activity. We'll take a look at each one of these fund asset groups in more detail, starting with the equity mutual fund group. This was the $5.1 billion net outflow, was the 11th straight net outflow for the group. As we see, this was driven mostly by domestic equity funds that had $3.1 billion leave, while non-domestic also contributed $1.9 million to the total net outflows. The peer groups that were hardest hit were the international large cap growth funds and the large cap growth funds peer groups, which had approximately $860 million and $740 million leave respectively. We'll move on to our next group now, which is equity ETFs. We saw net inflows here last week. The group took in $3.6 billion in net new money. The largest individual net inflows belong to Invesco QQQ Trust, took in $2.2 billion. Spider Gold had net intake about $1.2 billion, and the Spider S&P 500 grew their coffers by roughly $759 million. On the flip side, we see the ProShares Ultra Pro QQQ with net outflows of $717 million, and the iShares Core MSCI Emerging Markets product had net outflows of $614 million. That wraps up this asset group. We'll move on to taxable bond funds now, starting with mutual funds. Net inflows here again last week. The group took in about $6 billion, ran their streak of weekly net inflows to 13 straight. The major players were the core bond funds and the core plus bond funds peer groups, two intermediate term peer groups. Took in net new money of $1.4 billion and $920 million respectively. We'll look at taxable bond ETFs now. Net inflows here as well last week's to a total of $6.6 billion. It was this group's 15th straight weekly net inflow. And as the chart indicates, the iShares iBox dollar investment grade corporate bond ETF had the largest net intake, just about $1.3 billion. And this was followed by the Spider Bloomberg Barclays high yield bond and the iShares Core US Ag bond, which had net inflows of about $776 million and $718 million respectively. Those products seeing money leave included the Spider Bloomberg Barclays 1 to 3 month T-bill product and the iShares short treasury bond ETF, which had net outflows of $540 million and $278 million respectively. As we said, it's been a pretty good run both for taxable bond mutual funds and taxable bond ETFs. This is represented if we look at their flows together for Q2. They took in just about $161 billion in net new money, which is their all-time best quarterly result, which comes on the heels of their all-time worst quarterly result in Q1 of, as I saw, net outflows of about $187 billion, of course, highly influenced by COVID-19. We'll move on to our next asset group now, which is muni bond funds. This group is also on a net inflow run. They took in $644 million in net new money last week. It was their 9th straight weekly net inflow. And as per usual, the major players here were the national muni peer groups, as we saw general muni debt funds and short muni debt funds taking $251 million and $184 million, respectively. Our last group to look at is money market funds. As we mentioned in the intro, the first net inflow for this group in 8 weeks, $4.7 billion in net new money. We saw a couple of the peer groups with large net inflows. Institutional money market funds took in $6.5 billion, as did institutional U.S. government money market funds. Conversely, we also saw some net outflows from some of the peer groups in this macro group, led by institutional U.S. Treasury money market funds that saw just about $5 billion leave their coffers. Well, that wraps up this week's Flows report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.